So let's talk about 2025. What a weird year for crypto, right? I mean, we saw these absolutely insane record breaking highs, but then it somehow ended in the red. How does that even happen? Well, we're going to dive into a new report that tries to make sense of it all and figure out what it means for what's coming next. All right, let's just jump right in. This chart, wow. It basically tells the whole story of 2025 in one picture. It is a complete and total roller coaster. You see that plunge right at the start of the year, then whoosh, a huge rally through the summer, hitting this massive new peak in the fall, and then boom. It's like it just fell off a cliff to finish the year. A seriously wild ride with well, a really confusing ending. And that right there, that's the big mystery we're going to try to solve. Think about it. The market hit a mind-blowing $4 trillion valuation. I mean, that's just an incredible milestone. So how on earth is it possible that a year with so many huge wins could actually end up in a loss? It just doesn't add up, right? Okay, so to figure this out, we've got to look at the numbers. And honestly, when you put them side by side, it's kind of hard to believe they're from the same year. So first up, the high point. The total market cap just completely smashed all the old records. It peaked at an unbelievable $4.22 trillion. To give you some perspective, that's bigger than the entire economy of a country like Germany. This was just a moment of pure, absolute euphoria in the market. And at the same time, the OG, the one that started it all, Bitcoin, it soared to this breathtaking new all-time high of $126,000. And listen, this wasn't just, regular folks buying in. This kind of price action, it screams massive confidence and a huge, huge flood of institutional money coming in. And yet, here it is. Here's the paradox. After all that, after those incredible highs, the total market finished the year down almost 8%. So you have to ask, what in the world happened in those last couple of months between that peak and the end of the year? Well, the report we're looking at points the finger at one main thing, just how chaotic the world stage was. It created what they call a data fog for investors. Basically, it was almost impossible for anyone to get a clear read on what was actually happening with the economy. I mean, think about it. The whole year was just one thing after another. You had a huge AI boom causing volatility early on. Then, bam, a trade war tariff shock that got everyone scared. The summer rally was great, yeah, but it was followed by a record-long government shutdown in the US that just hid all the important economic numbers. Investors were basically flying blind. And that's the key takeaway here. The big one. Crypto wasn't in its own little bubble anymore. Not by a long shot. Its price was now tangled up with everything happening in the global economy. Interest rates, political drama, all of it. Okay, now this is really interesting. Look closely at what's happening right at the end of the year on this chart. You've got your traditional safe havens, like gold, which is that solid line and it's soaring. But look at Bitcoin, the dotted line, it totally decouples. It just goes in the complete opposite direction. So, why do they split like that? Well, the report has a pretty compelling idea. Metals have this thing called a sovereign put. What does that mean? In simple terms, when things get really hairy, central banks step in and start buying up gold, which creates a kind of safety net. Crypto? It just doesn't have that official, government-level backstop. Not yet, anyway. But, and this is a big but, here's the twist in the story. While everybody was glued to the crazy price swings, all that noise, something way more important and probably way more lasting was happening just beneath the surface. We're talking about the real, structural maturing of the entire industry. Let's just start with this one number, $21 billion. That's how much money flowed into the U.S. spot Bitcoin ETFs alone. And let's be clear, this isn't retail hype. This is a massive, quiet wave of big-time institutional money systematically moving into the space. And a huge piece of this whole growing up process was the rise of what are called real-world assets, or RWAs. The easiest way to think about these is like a bridge that's finally connecting the traditional financial world, stocks, bonds, directly onto the blockchain. And this right here, this shows just how massive that shift was. For the first time in history, the total value of these tokenized real-world assets on the blockchain was actually more than the value on all the crypto-native decentralized exchanges combined. That bridge we talked about? Yeah, it just became a superhighway. And what's so crucial to understand is that this wasn't happening in some Wild West vacuum. Regulators finally stepped in with some much-needed clarity, especially with this thing called the Genius Act. This was a total game changer. It created the first real federal rulebook for stablecoins in the US, which is basically the giant green light that all the big financial players have been waiting for.
And that clarity, it allowed stablecoins to absolutely explode. They became a dominant way to move money around the world. I mean, just look at this chart. Their daily volume was more than double a giant like Visa. This isn't some niche crypto thing anymore. This is real-world, massive-scale utility.
Okay, so after that totally confusing year, that brings us to the big question. What's next? Where do we go from here in 2026? Well, the report predicts that the data fog we talked about is finally about to lift, and that's going to lead to what they're calling a major risk reboot. And this whole reboot idea is based on what the report calls a policy triumvirate, which is just a fancy way of saying three big economic forces that are all expected to hit at the same time. You've got more government spending, you've got lower interest rates coming, and you've got a continued push for less regulation. The one that's going to hit first is that government spending. There's a big bill, the OBBB, that's set to drop over $100 billion in tax refunds right into people's bank accounts. And that's happening early in the year. That is a ton of cash getting injected straight into the economy.
So what this all points to is a really fundamental shift in what actually drives the crypto market. The argument is that we're moving away from cycles that are just powered by retail hype. The next bull market, it's going to be powered by a dual engine. On one side, you've got massive government-level cash flowing in, and on the other, you've got real, big business use cases. And that leaves us with one final and really powerful question for the year ahead. We've just walked through all the incredible, fundamental progress that was actually made in 2025, right? The institutional money, the regulatory green lights, the real-world uses. So as that data fog finally clears and this new wave of money starts to pour in, is 2026 going to be the year that the price on the screen finally catches up to all that progress on the ground? Now that is the trillion-dollar question.